Welcome in, everyone. Thanks for joining us for our, might be the second annual Ted and Diane talk here. We're excited to cover some pretty important topics to title and real estate. We have two of the best people in the industry to shed their expertise on it. We have the topic of mortgage rates. We have what's happening with the Federal Reserve, their meetings and their rate cuts. The FinCen regulations are going to be coming due December 2025. We have the Title Waiver Program that's ongoing, and then we have updates on ALTA's initiatives and security title initiatives for 2025. So if anyone has questions, make some time at the end to get those answered. But other than that, Diane, you have the floor. Thank you.
Awesome. Thank you, Drew. And it's great to be here. Ted, I can't believe it's been a whole year.
That's true. It's been a busy year, too.
Right. I was going to say, in some ways, it feels like it's been a lot more than a year. So much has happened, right?
Yep.
Or came with lots of unpredictability.
Well, Diane, I'd just like to thank you for joining us today and for agreeing to share your thoughts on where the state of the industry is right now and where we're heading in 2025. After a couple of years of very bad not very bad, but not great real estate sales and refinancings, I know everyone is anxious to see a return to some normalcy. And of course, one of the main factors in returning to normalcy is an improvement in mortgage interest rates. So I was just wondering what your thoughts are for where rates are headed next year, how many cuts we might expect to see from the Federal Reserve, and when we might expect to see improvement in the housing inventory.
Yes, well, thanks, Ted. I'm excited to be here. You're right. A lot has happened, and from an industry perspective, it's been a very challenging couple of years, and from the economics of it, and then of course on the advocacy front, right, on the regulatory front, it just feels like we couldn't catch a break this year. Everything sort of across the board.
Very true.
Yes, I know. It's been crazy. And honestly, I just got back from being at an event with other trade association CEOs, and one of our speakers was Kelly Ann Conway, and everybody had a lot of questions for her because she does speak with our incoming president often. And one of the things that she shared, which I think was really insightful for most of us, was that Trump really wants to get back to 2019, pre-pandemic, what things were like, where things were headed, and what was going on, which I think for all of us would be a welcome change. Because as you know, earlier, just most recently, the Fed cut 50%. And I think, that was something that everybody was a little surprised by. I think we were sort of anticipating maybe not that point, not that far. But, they're scheduled again next week. I think it's actually a week from today. It's on the 18th that we should have another. And many people are anticipating we'll probably get half of that, about 25%. I think one of the things that we're all watching very closely is the Fed is using this 2% inflation as sort of how to measure this. And I think they feel if they go outside of that or they do something, if they wiggle, that it'll leave them open for a lot of misinterpretation in the future. But as a result of that, I think what we're seeing within our industry, mortgage bankers, was anticipating in 2025 that we should see something about 5.9. I think Fannie maybe predicted 6.1% at some point for mortgage rates, which I think all of us would be pleased with that, right, at this point, to have some stability.
That should help the price of refinancings, that's for sure.
Absolutely, because everything's been going up and down, and there's been no sort of we haven't seen a steady for a while now. So hoping that will continue. And I fully anticipate, I've heard both sides, but based on what we're seeing and what we're hearing here in Washington with the excitement of, the new administration coming in and the expertise and what they're trying to achieve, that there'll be a lot of optimism on the economy and how to move things forward. And I know it will be top of mind because I don't think they would have been elected if this wasn't their top. Because I think the people have. The people of the country spoke. The economy is the most important thing. People were really seeing it. And so I do believe that we're going to start to see maybe not as many interest rate cuts as was originally forecasted, say, back in June and July. But I think we will start to see things moving in the right direction. And as a result, by hopefully this time next year, interest rates will be at a steady, if we're at a 5.9, 6.1, I think we'd be in a really good place.
Yeah, I hope you're right. Because certainly if we can start to get back towards the low fives or the high fives even, we should see a spate of refinancing and certainly help with home affordability. In that regard, what do you see with housing inventory?
Yeah, that is, I think, as you know, that is the bigger challenge, right? The housing affordability piece became a hot topic in the past presidential election. We were even thrown in as a political football, right, at the State of the Union as a way to sort of address that, which,
Imagine that.
Out of nowhere.
Title insurance in the State of the Union, that's the first step.
Wasn't that unbelievable? And so, but the good news is once everybody became informed, I think people realized that a lot of the affordability is really a lack of available homes, right? That there hasn't been much construction, new construction, since 2008, 2009. And so a lot of these issues are local, but I do believe that there's a greater focus on that. There's a greater initiative to help drive those barriers and to sort of cut down the regulatory efforts and to make sure the private, folks who are going to be the ones who are going to be able to get this revived have the ability and the environment to do that. So it's not going to happen overnight on the affordability side, but at least things are moving in the right direction in that area.
Yeah, and everything I've been reading suggests that there are more homes that are coming on market, I guess, as people have changes of lifestyle and just need to move to other areas of the country. So it does seem like things are starting to unfreeze a little bit at this point.
Yeah, and I think many of us, I saw the statistic, I want to make sure I get it right. I think it's like over 64% of Americans are what we consider rate locked, right? Many of us refinance during the, but then life happens, right? Families get larger, smaller, people adjust. To your point, they move to warmer climates or different areas to be near other parts of their family. So I think we'll start to see more of that. Again, nothing like we experienced during the pandemic, but at least I think things will start to shake out more.
And it sounds like President Trump is focused on trying to create some additional inventory by opening up some federal lands and providing incentives and trying to deregulate some of the housing regulations, construction regulations.
Yeah, I think what we're going to see, Ted, we're going to see some really creative, innovative thinking around that, which I think is really exciting. As you know, there's a lot of folks that are coming to Washington who haven't spent a lot of time here. And, in some ways people question that, but I think in many ways they bring new ideas and new ways of doing things that should be, I think in many ways helpful for us as we kind of move forward.
Well, speaking of new people coming to D.C., of course, Elon Musk is looking to reduce government bureaucracy. How do you see that potentially impacting FHFA, HUD, CFPB?
Yeah, that's a great question. I mean, obviously he's been very well received on the Hill on both sides of the aisle, right? So I think this is something that I think nobody can deny. I saw our mayor here in Washington, D.C. was testifying earlier this week, one of the biggest issues. And I've seen when our members come into town in Washington, we've had meetings over at FHFA and some of the CFPB and some of the other buildings, and they're empty. And it's shocking, that we have these large government buildings that are being, the electricity and the heating and all of that goes with it, and nobody is in these buildings. So I think that is going to be definitely sort of something that's going to be addressed immediately, and it should. There's a lot of those, what we would consider the low-hanging fruit that's out there. But there's
That's not going to help your commute, though, Diane.
Yeah, that's true. That's a very good point. Although, we were talking about this morning, one of the things that has sort of changed when it comes to commuting is Mondays and Fridays, you could be here in I can be in the office in less than 15 minutes because there's nobody on the roads. But Tuesday, Wednesday, Thursday, there's no patterns anymore. You could come in at 7 in the morning and you're still hitting traffic, or 3 o'clock in the afternoon. I feel like we're now in LA, where they're just always jam-packed. You never know on those 3 days. So someday we'll get back to some type of, pattern, but you're right. Actually, though, the good news is our commute is going to be adjusting because we're moving. We were very fortunate because our lease went up is up at the end of next year, 2025, and we were able to find a new space closer to Capitol Hill. We're going to be able to walk there, and many of our team, as you know, spend a lot of time going back and forth. We're going to be at 6th and Pennsylvania, and we'll be really close to the White House and some of your regulatory agencies. So, and we were able to negotiate a really good lease that, you know, with a significant, I think, almost 18 months of free rent. So we got lucky.
Well, good. Well, you'll have to show us around when we're in D.C. Next May for the legislative conference.
Yes, we won't be moving until August, but we will be more than happy to have everybody come by and visit us. We'll look forward to it.
So talking about the CFPB and some of the other governmental agencies and the GSEs, what's happening on the title waiver front? Anything of import?
So, you know, the latest, we've seen that one of the mortgage companies that put in for being part of it put something out about being part of it, but there's been no official output from either FHFA, Fannie or Freddie. We've reached out to all of them. We haven't heard anything from them, which is highly unusual. Ted, so we're anticipating that, you know, there's really only a few more weeks before the end of the administration that we're going to see a lot of changes very early on. That being said, just last week, there's a real estate caucus on Capitol Hill. It's a bipartisan group of individuals, and they put out a letter questioning this title, what they're calling acceptance program at this point, pilot. And it has not gone through any of the normal regulatory channels. It's not been put out for industry to review and to give feedback on. So we're continuing to make sure that our voice is heard, and that before this pilot actually moves forward, that we're going to be able to give our input and that it should be taken. So it's been, as you know, an unusual situation for us where, you know, this time last year when we were talking, this pilot had been put to bed. You know, I had received a call from the FHFA director, and as well as from the CEO from Fannie Mae, saying they were not going to move forward with it. And then it magically appeared in the State of the Union, and everybody was surprised, and including like the senior members of the Financial Services Committee on Capitol Hill on both sides, both the Democratic and Republican side. So there was clearly a lot of, should I say, shenanigans going on that nobody was aware of, and how, you know, as I mentioned earlier, our industry and what's being used as sort of a political football when it came to how can we show, you know, we're saving money. And our hope is that we can get back to business, talking about the serious work that we do and the importance of what we do, and to make sure people, you know, are not being put at risk on the biggest asset that all of us own in you know, in our lifestyle,
Well, you and the entire ALTA staff deserve a long round of applause for building opposition on Capitol Hill against the Title Waiver Program. So.
Well, I appreciate it. I really appreciate that, Ted. But I'll be honest, you know, our members have really stepped up. You know, our contributions to our PAC have been significant, which has allowed us to have the impact that we've had. Our board has been really supportive of all the different initiatives that we've taken to educate folks, and it's really given us a chance to defend who we are and to really, with clarity, make sure people understand what we do and the importance of it. And I think there's nothing like a good crisis, right, to sort of make sure that these things get to where they need to be. But I'll also say one of the things that we've been doing a lot of work on, we've been working very closely with our state LTAs, and we're going to continue to do that in 2024. Because as you know, our industry is state regulated. And we've heard from state regulators, the Insurance Commission, and others, like, what is going on? Like, you guys are probably one of the most well-regulated and, you know, complying to everything they're supposed to do industries that exist. We don't really understand. So I do feel like when we get, you know, back to some normalcy, you know, like I will say, stop the madness and let's get back to work on, you know, what we're really trying to do for folks. Places like the CFPB and FHFA, I think we're going to see significant changes in the policies. And I think that's the most important we need to be focused on these policies that support our economy and support the consumers. I mean, that's really where we, and what we do is probably one of the best, from a consumer protection, we probably provide the best protection for any asset that any, you know, American owns in the country. And that's something we're proud of, and we're going to continue to make sure that folks understand that.
Amen. Now, Drew had mentioned at the top of the hour that one of the big things that's coming up in 2025 is the FinCen anti-money laundering rule. I know that agents definitely need to start thinking about that, gearing up for it, because it will, even though it's not effective till December 1, 2025, it's going to be a big uphill climb for the industry as far as getting up to speed, getting trained up and staffed up for it. It sounds from what I've heard that it's going to have a significant cost to the industry as far as the time that's going to take to prepare all the various reports that need to be submitted. Just wondering what your thoughts are, what ALTA might be doing to help prepare the industry. And,
yes, well, you know, Ted, when this was announced, I think it was back in February. As you know, there's been limited, you know, where we've had to sort of gather this information in geo-targets, and now they're expanding it to all cash deals. We have been working very closely with FinCen. We've been directly in contact. You might recall that the director did come to our advocacy summit, and we were lucky to get that. But just last week, or no, it was between Thanksgiving and now, so in the last couple of weeks, myself and Steve Gottheim on our team, our general counsel, along with Chris Morton, we went and met with Director Gacky and her team. There were probably 8 to 10 folks there from the FinCen team. Believe it or not, their office is just down the corner from where we are here on 18th Street. The Department of Treasury has people spread out all over town. We were really, really very clear. We wanted to make sure, yes, we know we have to comply and the things we have to do, but we want to make sure they understood the impact of this and what, you know, what it's going to entail for us as an industry and as, you know, small businesses, and what they're asking us to do. We're not law enforcement officials, right? We don't have that training. You know, there are a lot of things, there's these expectations that, you know, are unfunded mandates put on our industry.
Mm-hmm.
The director was very clear that, you know, this is something that is sort of, you know, we're asking the industry to do with sort of that has a patriotic feel to it. And I don't think anyone in our industry would deny that they're, you know, probably the best citizens that our industry, you know, that any industry could be in terms of making sure, you know, that they're good citizens. But I think it's really important that we're not going to give up on, you know, asking them why are we being asked to do all of these additional things with no type of funding or any type. So that's something that we're going to continue to focus on that. We're going to continue to make sure they understand all of the different components of what this entails. I know there's a lot of numbers. I think I saw most recently that we anticipate this is probably going to be close to about 495,000 transactions a year. And there comes a cost with that. It might, you know, it could be more limiting because we're working very closely with them, asking them specific questions like, you know, what if the customer refuses to give the routing number? Well, is that going to slow up the deal? Like, these are really important things that these transactions need to happen, right? And from a business and others. So we're really working this from two sides. So we're going to continue to lean on them and make sure they understand the impact of this and help narrow some of these, you know, expectations that they put on us. But in addition to that, we do recognize that, you know, by law, that this thing needs to be in place by December 2025. So yesterday we actually had our first webinar, and we're continuing to work with the folks at FinCen, and they have agreed to come on and take questions from individuals. We're going to continue on the FAQs and others to be in close contact with them, because we think it's important that they hear from our members as well directly what some of these challenges are, so they can better understand as they sort of have the ability right now to adjust some of these requests and the way they gather this information, and to utilize some of the data they already have. So,
right.
You know, this fight is not over, but we do have a responsibility to make sure people understand what's currently being expected of us and how we're going to get that. So, you know, right now you can look at the webinar that happened yesterday, both on our website and on YouTube. And we will continue to provide information throughout this whole, 2025, because there are a lot of nuances, like which transactions, if you're a public company, it might be different than other company, who has to report, who doesn't, if you're an attorney. And so we want to make sure everybody, that most people understand and they're not doing more work than they have to, but when they do need to report, exactly what it is and how that needs to be done. So.
Well, there certainly are a lot of nuances to reporting, and hopefully they'll give us some leeway when it first goes into effect without any enforcement for at least a few months. But for those who are participating today or attending today who aren't that familiar with it, under the anti-money laundering rule, we will be expected to report a variety of information on almost all transactions that are cash transactions where the buyer is a non-person entity, where there is no financing through a known institution or mortgage broker. And that reporting is going to include both information on the transaction itself, the closing date, purchase price, property address, information on yourself as the closing agent, information on the seller, including the full exact name, their principal business address, as well as their FEIN or Social Security number. And for the buyer side, in addition to that same information, you're going to need to provide information on the beneficial owners of the entity, which is generally anybody who has 25% or more ownership in it or who exercises control over the entity. And getting that information as you're trying to prepare for closing is certainly going to be trying, and as Diane suggested, might impede some closings. So hopefully ALTA can help FinCen get this straightened out to minimize the impact on us.
Right. And again, we're not going to give up, changing it either.
Right, trying to get rid of it entirely. That would be wonderful, because it is certainly going to increase everyone's costs, and it's something to be considering as far as what you might charge for the reporting of these transactions. So I was wondering, Diane, you've got a full plate there. What is top of your list as far as priorities are concerned?
So right now, like everybody else in Washington, Ted, we're sort of watching closely to see the folks that we really care about, where, who the new leaders will be, and making sure we have our priorities put together, that, we want to educate folks on the great work that we've been doing in all of the communities. As you know, we have folks in every single community across the country, which is very valuable to us. So we're not just dealing with the folks on Capitol Hill, but also the folks at the White House, the folks at Treasury, the CFPB, HUD. As you know, there's so many new players coming into the table, and we're doing everything we can to make sure they know who we are, what we do, and the value that we bring, and that we will have, that we can serve as a resource for them as they step into these roles and sort of set their priorities. As you mentioned, affordability continues to be a significant issue. Recently, we announced, along with the mortgage bankers and many others in the real estate ecosystem, everybody from the realtors, I'm trying to think who else is involved, both Fannie and Freddie are involved, a new effort called Convergence, and that is to address affordability for the first-time home owners in many key geographic areas. We're actually kicked it off today. There was a big meeting talking with everybody at the table, talking about, we already had some initiatives going in Memphis, Philadelphia is another area, Ohio. So, we're not just sort of doing what we're supposed to do for our business, but we're sort of expanding that. And we're actually going into these communities, using our expertise from all these different, and making a difference. So, we feel really good about the work we're doing. We want to make sure that the new administration knows that we're going to partner with them. We're going to get things done, and we're going to continue to work with folks on both sides of the aisle, because I think, as everybody knows, what we do is not political. I like to say we're the party of title, and we're willing to talk with anybody, because most people, I would say all Americans, aspire to be homeowners, the majority of them, and our job is to make sure they stay in those homes.
Well, that's great. Sounds like you have an exciting year ahead of you.
We do. We're very optimistic, honestly, because we do think that there's going to be some big battles that we'll be part of with the broader trade association world in Washington, D.C. The tax are going to expire, right? So we want to make sure we get in on that. the SALT, they refer to as SALT, state and local taxes. There's a lot of fear around tariffs, what that can do to the economy and to different industries. Even in our industry, we would see it most likely in the construction world. So, I do think that on the immigration front, there was a lot of concern with this meeting that was just with many people who are in the restaurant industry or other industries that would be directly. But, I am fairly confident that the folks that I think the administration are going to be focusing on are those that are here, criminals and others that I don't think, that they're coming in to round people up. I think the idea is to sort of slow things down and make sure, as folks come into our country, that there's a place for them to be and that the folks here already have what they need. So I'm, again, optimistic. There will be some bigger issues, and I do think some of the challenges, making sure that, our voices are heard in terms of how we'll be affected by it, but that for the most part for our industry, we'll start to see things kind of moving in the right direction. Because again, back to getting the economy to where it needs to be, and if it's back to 2019, I think that sounds pretty good to all of us.
Well, I'm sure you'll also be continuing your focus on education for the industry, as far as preventing seller impersonation, cyber fraud, and how AI can be implemented with effectively by us. I know in the spring you have a new name for your get-together. I've forgotten what it is now.
That's right, ALTA Edge, and thank you for the opportunity to talk about that. That's exactly right. Well, as you said, if we're to ask anyone in our industry what keeps you up at night, right, it's the fraud, right, the wire fraud, the seller impersonation, how sophisticated these bad guys are today, and how what an impact that they've been making. And I will say, I believe as an industry, we've done a really good job, but these guys are smart and sophisticated. They're always like 2 steps ahead of the next, right, big issue that's coming out there. And one of the things that we're doing is continue to educate folks to make sure they understand what they should be looking for. And we've been, recently I did a podcast similar to this with the AARP, talking about seller impersonation. And as a result of that, I received a phone call from the FBI, an agent at the FBI in our financial transactions division, and asked myself, and I brought Elizabeth Blosser, who does a lot of these issues for us, and they really they were amazed at all the work that we were doing and realized the important role that we play being on the front line and identifying these types of transactions and where they are. And we're working with them and putting together a series of other folks, the notary folks and others, to be involved in a coalition. So how we can interchange our information and get the information to the FBI quicker so they can sort of act on this in a proactive way. So that's a really exciting initiative that we have been asked to participate in and play a big role in because, again, because of the work that we've been doing, we're getting recognized for that.
Mm-hmm. Well, you certainly have some great resources on your website. If anyone hasn't been to ALTA's website to look at some of the resources that they have on seller impersonation and cyber fraud, you certainly should take some time to do that. Now, when is Title Edge, and where's it going to be hosted this year?
So it's going to be really exciting. We're going to be in Louisville, Kentucky. It is March 19th through the 21st. And as you said, Ted, we are going to do a lot of education. Most recently, we were really focused on sort of the mid-level employee, helping them get, the training that they need, but also sort of their own personal development. But we also recognize that there's very few times throughout the year where we can all come together. And we wanted to make sure that this event, because, there's between ALTA Edge now, our Advocacy Summit, and ALTA One, that everybody who needed to come out and learn and to get the education that they need at all levels had something. So we will now have something for everybody at ALTA Edge. We'll have our board, we'll be there, we'll have our lots of folks, whether it's the new technology in our industry and the innovation that's happening, the education piece on the fraud, there'll be an advocacy component to it, because we really recognize that we have so much that we need to educate our members on across the board, that having multiple times throughout the year and being able to do that is really, really valuable. So that's something that will be happening, again, March 19th through 21st. We'll be in Louisville, Kentucky. We'll be at I believe we're at the Omni. We've got lots of great speakers. We've got lots of great education panels being put together, and just some really great opportunities on the technology front, folks sharing lots of different things going on in the industry. And we'll have an event around our ALTA Good Deeds Foundation. I think, Ted, you know, and others, we've been wildly successful in terms of raising money and being able to put that money back into the community really quickly, which I think is really a testament to who we are as an industry. For those who aren't familiar with the ALTA Good Deeds Foundation, it was created during the pandemic, really in response to the great work that our members were doing in their communities. We were watching everybody do these good deeds. And so when we were unable to host ALTA One that first year, our big members stepped up and took the money that they were going to invest in ALTA One and put it into a foundation. And that, you know, I would say at the time we maybe raised about $200,000, which we thought was phenomenal. Now we've raised over $1 million. I would say 1.3, and we've almost given out $1 million. Actually, I think we hit that number this year at ALTA One, that we've already made grants in the total amount of $1 million to at least 49 states, within 49 states, which you said. We just opened up for the next round of grants. So if you have a nonprofit that you're working with in your community and you would like to apply for a grant, altagooddeeds.org website, you'll see there's a form there to fill out. And we would announce that next round at the ALTA Edge event, which will be in Louisville in March.
That's great. It's important for us to give back to the community. We've certainly contributed every year, and I hope that participants or attendees on today's call will also consider giving to good deeds. It's a great effort on behalf of ALTA.
Yes, thank you, Ted. And honestly, I think it's a real testament to who we are as an industry. This is what we do, right? And all we are able to do is amplify that with, you know, sort of crowdsourcing our industry.
Well, Diane, I don't want to take up all of your day. I know you're a very busy woman. Anything else you want to share with us?
You know, I just want to make sure everybody knows how important it is that the connection that you all make by being part of ALTA. I mean, we love hearing from our folks. You know, Richard Welshon has stepped in as our new president. One of Richard's initiatives for 2025 is to really elevate the connection we have with our state LTAs, because there's so much great work that's happening at the state level. We want to continue to make sure we're leveraging that. And if there's anything specific that you need, or you know, that our industry should be doing that we're not doing, we want to hear from you, honestly, because you know we see our role as making sure that you all have what you need to be able to do your jobs, but also to prevent educating folks, you know, at the national level, but also coordinating and with other industries, whether it's the mortgage bankers and others on we're here for you, and we want to make sure you all understand that and make sure you're aware of the resources that we have and how you can benefit from them. And we want to thank you for all of I will tell you, we've had more committee participation in the last 2 years when we needed it, right, as we have these big battles. But everybody has stepped up, and it's really been, I think the results show how compassionate we are about what we do, but also how good we are at what we do and the important role that we play.
Well, it's been a challenging time for the industry, but certainly an exciting time at ALTA. You certainly are growing, and you're doing a great job in your leadership position. So thank you. And thank you, everybody, for joining us today. We wish you a wonderful holiday season, and best of all, or most of all, a very successful 2025. Thank you for joining us.
Thank you, Ted. It's great to be here.
Bye-bye.
See you later.